Hello students, welcome to all of you Shiksha 360 Jack classes. So today we have to discuss the chapter number 29 part 2 taxation in accounting. Very important session for the knowledge purpose and for the examination purpose also. So this is some points we have covered. I will left here. Now we will move towards the next part, that is part 2. That is from here we have to start, that is TCS under GST. Clear? That is TCS under GST. So let's start. So important provision in this regard, it is basically effective from 1st of October 2018. Clear? So when it is effective, that is it is effective from 1st of October 2018. R as under first one. Any dealer or trader, clear? Any dealer or trader selling goods online, clear? Any dealer or trader basically selling goods online would get the payment from the online platform. Clear? So any dealer or trader who are selling goods online, that is online, would get the payment from the online platform. So how they will get the payment? After deducting an amount tax at the rate of 1% under IGST. Clear? IGST, that is integrated GST. Clear? So any dealer or trader selling goods online would get the payment from the online platform after getting an amount tax at the rate of 1% under IGST, that is 0.5% in CGST and 0.5% in SGST. Further, the tax would have been to be deposited to the government. Clear? The tax would have to be deposited to the government by the 10th of the next month. Clear? The tax would have to be deposited to the government by the 10th of the next month. Clear? So the tax collected. Clear? So like we can say that in the number, if they have tax is to be collected, so they have to be deposited till 10th of December. Clear? So they have to deposit that tax till 10th of December. Clear? So tax would have been deposited to the government by 10th of the next one. Third one. All the dealers, clear? Third one, that is all the dealers, traders are required to get registered under the CGST compulsorily. Clear? All the dealers, traders are required to get registered. Clear? Are required to be get registered under the CGST compulsorily. Clear? Under the GST compulsorily. Okay. So now move to the next one. So how we have to classify? Clear? How we have to classification of the income taxpayers? Clear? Classification of the income taxpayers. So for the purpose of the income tax, clear? For the purpose of the income tax, the term person as mentioned in section 2 of the Income Tax Act includes the following. Clear? So for the purpose of the income tax, the term person as mentioned in section 2 of the Income Tax Act basically includes the following. Clear? So how it will be included? The first one, that is an individual. So who, that is individual, that is the individual basically, that is an individual basically means a natural human being and also includes a person of unsound mind. Clear? So individual in that basically, what is the categorization of the individual? That is individual basically means a natural human being, and further basically it also includes a person of the unsound mind. Clear? And further basically it also includes a person of the unsound mind. Second one, that is the Hindu undivided family. Second one here, that is a Hindu undivided family HUF. We have already discussed in detail in the PPP regarding the HUF account. Clear? So now further start. So under the Hindu law, and HUF, it is a family. Clear? Under the Hindu law, basically an HUF is a family which consists of all the persons. Clear? Which consists of, clear? Under Hindu law, basically an HUF is a family which consists of all the Hindu persons lineally descended from a common ancestor. Clear? That are basically all are coming from a common ancestor and includes their wives and unmarried daughters. Clear? So under an Hindu law, an HUF, it is a family which consists of all the person lineally descended from a common ancestor and includes their wives and unmarried daughters. Clear? And it also includes their wives and unmarried daughters. Further, that is, an HUF cannot be created under a contract, but it is created automatically in a Hindu family. Clear? So an HUF, it is not like we can say that created under a contract. So it is created automatically in a Hindu family. Jain and Sikh family are treated as HUF. Clear? So like not only the Hindu family can open the HUF account, even the Jain family and the Sikh family are treated as HUF. Clear? Even they are treated as HUF. Not even that is basically they are also treated. Clear? Jain and Sikh family basically are also treated as HUF under the act. Even though they are not governed by the Hindu law. Clear? Even though they are not governed by the Hindu law, but they have the HUF account facility. Clear? They have the HUF account facility. Now move to the next one. That is a company. Clear? So company it is also as a tax paid. So both domestic and foreign companies, clear, both domestic and foreign companies are included under this classification. An individual and a company, clear, an individual and a company are not taxed at the same rate, clear. So that's why there is a differentiation, clear. For every organization, for every different category, there is a different taxation. An individual and a company are not taxed at the same rate, clear. Individual, just we know that basically individuals are taxed on the basis of the tax slab at different rates, like up to 5 to 10 lakh, 10 to 15 lakh, above 15 lakh, clear, like this way, clear. But companies are taxed to be in a different way, okay. So the income tax paid by the domestic and foreign companies, clear. So here that is the income tax paid by the domestic and foreign companies on their income. In India, it is called as the corporate income tax, clear. That is to be known as the corporate income tax, clear. So the income tax paid, clear, the income tax basically paid by the domestic and foreign companies, clear, the income tax paid by the domestic and the foreign companies on their income in India, it is to be known as the corporate income tax, clear. That tax it is to be known as the corporate income tax. Further, it is at a specific rate, clear, it is at a specific rate as prescribed by the income tax department, subject to the changes every year in the union budget, clear. So it is at a specific rate as prescribed by the income tax act, clear, it is at a specific rate basically as prescribed by the income tax act, subject to the changes, clear, subject to the changes every year in the union budget, clear, subject to the changes every year in the union budget. So different rates of tax are applicable to the domestic and foreign companies, clear, different rates of tax are to be applicable for the domestic and foreign companies, and it is subject to the changes every year in the union budget, clear. So as per the budget, like if the government will increase, so the taxation will be increased in the upcoming financial year. If the taxes will decrease, so as per that, taxes will be decreased in the upcoming financial year, clear. So it is according to that. Now move to the next one. A firm or LLP, clear. Fourth one, that is a firm or LLP. So under the partnership form, a firm it is not a legal entity, clear. Even a firm it is not registered, clear. Under the partnership form, a firm it is not a legal entity. However, for income tax as well as for the GST, clear. However, for income tax as well as for the GST, it is a separate legal entity, clear. However, for income tax as well as the GST, it is a separate legal entity. So thus a firm is regarded as a unit of assessment, clear. So in that case, so thus a firm it is regarded, clear. So thus a firm it is regarded as a unit of assessment. Further, a limited liability partnership, clear. A limited liability partnership, it is a body corporate, clear. A limited liability partnership LLP, it is a body corporate formed and incorporated under the Limited Liability Partnership Act 2008, clear. So a limited LLP basically it is a body corporate formed and incorporated, clear. That is basically formed and incorporated under the Limited Liability Partnership Act 2008. It is a legally separated entity from that of its partner, clear. It is a legally separated entity from that of its partner. Further, since the liability of the partner it is limited, clear, that under the limited liability partnership, clear. Since the liability of the partners is limited to the agreed contribution in the LLP, so it contains element of both a corporate structure as well as a partnership firm structure, clear. Since the liability of the partner basically it is limited to their agreed contribution in the LLP, so further that is it contains the element of both a corporate structure, clear. It contains the element of both a corporate structure as well as a partnership form structure, clear, as well as a partnership form structure. All firms and LLPs, clear, all firms and LLPs basically are presently taxed at a flat rate of 30%, clear. All LLPs and firms are basically presently taxed. How much taxation basically it is under that? That is it is to be 30%, clear. And one question from my side to all of you, basically, what is the tax on NRO account? The income earned by the NRE, clear, and that is from the local. How much tax is to be deducted on that, clear. How much tax is to be deducted on that Kindly answer fast regarding it, or you can ask in the comment section later, but that is important one. Okay, so please remember that all forms and LLPs basically are presently taxed at a flat of 30%. Now move to the next one. Regarding an association of person, AOP, or the body of individuals, clear, AOP or BOI, whether they are to be incorporated or not, clear. So association of persons or body of individual, whether sorry, whether they are to be incorporated or not. So here it is important to note that an association of persons or body of individual, it is deemed to be a person, clear. An association of person or body of individual, basically it is deemed to be a person, whether or not it was formed or established, clear, whether or not it was formed or established or incorporated with the objective of driving income, profits, or gain. Clear. So it is important to know that either the association of persons or the body of individual, it is deemed to be a person. Clear. That is deemed to be a person, whether or not deemed to be a person, whether or not it was formed or established. Clear. Whether or formed or not, basically it was formed or established or incorporated. Clear. It was formed or established or incorporated with the objective of driving income, profits, and gain. Clear. So what is that? That is income. That is the objective. Basically, it is of driving the income, profits, and gains. Further, trust created wholly for the charitable or religious purpose are allowed various benefits. Clear. So trust that is created wholly for the charitable or religious purposes are allowed various benefits under the Income Tax Act. Inter alia and exemption basically under the section 11. Clear. And that is basically there is exemption under which section? That is under section 11. There is exemption for them. Last one, that is the local authority and the artificial judicial person. Clear. Local authority and the artificial judicial person. So local authority. So a local authority basically means the municipalities and panchayats, etc. Clear. So a local authority basically it means the municipalities and the panchayats, etc. Last one here, that is the artificial judicial person. Clear. Last one which we have to discuss, that is it is regarding the artificial judicial person. So if an assessee under the artificial judicial person, that is if an assessee does not fall under any of the other categories that are included. Clear. If an assessee basically does not fall under any of the categories that are included in the definition of person, so then it is regarded to be as an artificial judicial person. Clear. So in that case, it is to be regarded as the artificial judicial person. And these entities are not the natural person basically, but separate entities as per the law. Clear. These entities basically are not the natural person basically, but as the separate entities as per the law. Okay. So the tax liability of a person basically depends upon his legal status and the above mentioned categories. Further, that is different rates of taxes are prescribed for the different categories. Clear. So here we have discussed the different categories like individual. First of all, we have discussed regarding the individual. After that, we will move towards the HUF. Third one, that is the company. Fourth one, that is the firm or LLP. Association of persons or body of individual. BO. Sixth one, local authority. Seventh one, artificial judicial person. Clear. Seventh one here, that is artificial judicial person. Okay, so these are the seven. Now move to the next point, that is very, very important. So classification. Clear. So how we have to classify of income heads. Clear. Classification of the income heads. So for the purpose of the income tax, clear, for the purpose of the income tax, the income it is categorized into the 5 heads. Kindly remember that for the purpose of income tax, the income it is to be categorized under 5 heads as under. Clear. How we have to classify and under which head? That is under 5 heads, as we have to now discuss regarding that. First one, that is the income from the salary. Clear. First one which we have to discuss, that is income from the salary. So income from the salary and the pension. Clear. Income from the salary and the pension, it is covered under this head. Clear. Income from the salary and pension, basically it is covered under this head. The amount is to be derived. Clear. Here the amount is derived at after allowing standard deduction of rupees 50,000. Clear. So income from the salary, basically the amount is arrived. Clear. That is on how much amount the tax is to be deducted. That is, it is allowed. Clear. The amount is arrived basically at after allowing standard deduction of rupees 50,000. Clear. After allowing standard deduction of rupees 50,000. that is a deduction in respect of any allowance. Clear? After allowing a deduction of rupees 50,000, that is a deduction in respect of any allowance in the nature of an entertainment allowance and deduction of any sum paid on amount of a tax on employment. Clear? And deduction of any sum paid on account of a tax of employment. Clear? So here that is standard deduction 50,000 or deduction in respect of any allowances in the nature of an entertainment allowance, and that is subject to certain, that is it has a specific limit, or any deduction of any sum paid on account of a tax on employment. Second one here, that is income from the house property. Clear? Second point which we have to discuss is that is the income from the house property. So this consists mostly of the rental income. Clear? That is from the house property, that is we are getting the rent. Clear? So this basically includes the rental income. So the tax levied by any local authority in respect of the property are allowed to be deducted. Clear? So that is if you are paying any tax on that rent. Clear? On that rent, that is to be levied. Clear? That is to be tax levied, that is tax taken by the local authority. Clear? So that is to be deducted here. Clear? Are allowed to be deducted. So the amount of any interest payable on borrowed capital, it is also allowed to be deducted. Clear? Like if we have borrow any capital, clear, on that we are paying the interest. Clear? So that it is also to be deducted. Like we are taking the housing loan. Clear? On that we are paying the interest. Clear? So that interest is to be also deducted from that income. Clear? So the amount of any interest payable on the borrowed capital, it is allowed to be deducted further. Third one, profits and gains of a business or profession. Clear? Profits and gains of business or profession. So this is when you are self-employed. Clear? This is basically when you are self-employed or work as a freelancer or contractor, or you run a business. Clear? That is profits and gains of the business or profession. Basically, this is when you are self-employed, work as a freelancer or contractor, or you run a business. So further, that is life insurance agents, doctors, life insurance agents, doctors, life insurance agents, doctors, chartered accountants, and lawyers who have their own practice. Clear? That is they are working individual. Clear? So law, life insurance agents, doctors, chartered accountants, lawyers who have their own practice. Clear? Who have their own practice, tuition teachers, architects, etc. Further, corporates, banks, insurance companies, and financial institutions are taxed under this head. Clear? They are taxed under this head. Clear? Like if you are getting, like you are working as a trainer. Clear? Like teaching trainer. Okay, so you or any other trainer. Clear? So you will get your salary basically after deducting a certain percentage. Clear? Which you will get in the income tax return. Clear? If you are tax, it is not more than that. Next one, income from the capital gain. Very, very important. I will take one special short session on that. Income from the capital gains. So income from the sale of a capital asset such as mutual funds. Clear? So income from the sale of the capital assets such as the mutual funds, shares. Clear? Such as the mutual funds, shares, house property, and agricultural land. It is included under this head. Clear? So income from the sale of a capital asset such as mutual funds. Clear? Such as mutual funds, shares. Clear? Such as mutual funds, shares, house property, and agricultural land. It is to be included under this head. Where a shareholder receives any money or other assets from the company. Clear? Where a shareholder basically receives any money. Clear? Where a shareholder receives any money or other assets. Clear? Where a shareholder receives any money or other assets from the company on its liquidation. Clear? That is on the winding up of the company. So he shall be chargeable to income tax under this head. Clear? So he shall be chargeable to under this head. To income tax basically under this head. That is regarding the income from the capital gains. Last one, that is income from the other sources. Clear? I will tell you once again, these are the very, very important points for the examination point of view and for the understanding purpose. Clear? As many of you are not, many of them are not aware regarding the income tax also. So income from the other sources. So basically what it consists? It consists of the income basically from the saving bank account, fixed deposits, winnings from the competitions, etc. Clear? That is comes under the income from the other sources. So gross total income, it is the total income earned by the SESI during any financial year. Clear? That is what is gross total income. Basically, it is the total income earned by any SESI during any financial year. It is a sum total. Clear? Basically, it is the sum total of all the incomes earned by the SESI under each of the above mentioned heads of the income. Clear? So it is basically assessed, or it is a sum total of all the incomes earned by the SESI. Clear? It is the sum total of all the income basically as earned by the SESI under each of the above mentioned heads of the income. Clear? So these are the five sources. These are the things that is classification of the income. It's first one, that is income from the salary. Second one, that is income from the house property. Third one, that is the profits and gains of the business or profession. Fourth one, which we have discussed, that is the income from the capital gains. Fifth one, that is the income from the other sources. Clear? Fifth one here, that is the income from the other sources. Now we have to move towards the next point, that is incomes not included in the total income. Clear? Incomes not included in the total income. Clear? So what type of income basically it is not included here? So first one, that is in computing the total income of any person. Clear? That is in computing the total income of any person. Any income falling within any of the clauses of section 10 of the income tax Act are not included. Clear? So what are the income basically under the section 10? Clear? So in computing the total income of any person, any income, the income basically which is falling under any of the clauses of the section 10 of the income tax Act basically are not included here. So what are these income? Clear? So some of these incomes are to be. First one, that is the agricultural income. Clear? First, some of these income are to be agricultural income. Second one, that is the share of the partner in the total income of the firm. Clear? So second one here, that is the share of the partner in the total income of the firm. Third one, that is the value of any travel concession or assistance received by an individual. Clear? So first, agricultural income, share of a partner in the total income of the firm, or the value of any travel concession or assistance basically received by an individual, gratuity received. Clear? Now the government has also increased the limit on that. Even on the like after that is, I am not like you will be paid of 240 days holidays, and that amount it is to be also taxable above 3 lakh. Clear? Now the government is also enhanced the limit from the next financial year on that also. Clear? I am not able to remember basically what this technical term is to be known as. Clear? On the retirement, the retired person basically will get that. Clear? If they have sufficient PL, it is to be left 240 days PL, it is to be basically paid. And next one, that is the gratuity, it is also different one. Clear? So just this is for a understanding purpose. This will not, we can say that I will include here. Clear? So some received on the voluntary retirement or the termination of service, payment from a approved superannuation fund. Clear? Payment from an approved superannuation fund. Superannuation fund, that is superannuation basically means that when the person is getting retired from any organization basically after completing the specific age. Clear? Like if it is 60, then they have completed the 60 years. If it is 58 or it is 62, clear? Depends upon that. Scholarship granted to meet the cost of the education, etc. Clear? So all these things basically will not be included under the form of the cost. Clear? All these things will not be included in the form of the cost. Now move to the next one. So what are the different deductions? Clear? Under different section, this is the last point which we have to discuss in our today's session. So chapter 6A. Chapter 6A basically specifies the exemptions available for deduction from the gross income. Clear? So chapter 6A basically specifies the exemptions available for deductions from the gross income for the arriving at the taxable income of the assessee. Clear? From the gross income basically for what? For the arriving at the taxable income. Clear? For the arriving at the taxable income of the assessee to calculate the income tax liability. Clear? For the arriving at the taxable income of the assessee to calculate the income tax liability. So these deductions basically are specified in section 80C to 80U. Clear? So these are basically specified from the section 80C to 80U. So some of the basic specified deductions we have to discuss. Now, first one, the most common, that is 80C. Clear? That is 80C. It is basically 1,50,000. Clear? That is basically referred to 1,50,000. So deduction in respect of the life insurance premium, deferred annuity, contribution to the provident fund, clear, that is contribution to the provident fund also. Next one, subscription to the certain equity shares or debentures, etc. Clear? All are to be included under that. Clear? All these things are to be included under that. Further, the aggregate amount of deduction under 80C, section 80 triple C and subsection 1 of 80 CCD, clear, of 80 CCD, clear. So these are different. 80C, 80 CCC, 80 CCD. It is limited to rupees 150,000, clear, 150, clear, 150,000. Now move to the next one, that is section 80D, clear. So 80D basically it is respect to one. You will get separate deduction under that also, clear. 80D. So deduction basically in respect of the health insurance premium, clear. So if you are paying any health insurance premium, so that is to be deducted basically under the section 80D, clear. So deduction basically in respect of the health insurance premium, basically it is under section 80D. Next one, 80E, deduction basically in respect of interest, clear. So under the section 80E, basically deduction basically with respect to what? Deduction basically in respect of interest on loan taken for the higher education. That is if you are taking the loan, education loan, clear. So under that, clear, 80E, that is basically deduction in respect of interest. Deduction basically in interest of loan taken for the higher education, clear, that is taken for the higher education. Next one, that is 80E, after that 80G. 80G basically that is deduction in respect of donations to certain funds or charitable institutions, clear. So I request to all of you, please remember that. Like 80D, D, health, 80E, E for basically education, 80G, G basically we can say that like charitable institutions or donations. Next one, that is 80QQB, clear, 80QQB, that is basically deduction in respect of the royalty income, etc. of authors of certain books other than the textbooks, clear. That is basically 80QQB, that is regarding the royalty income, very, very important. So basically deduction in respect of the royalty income, that is basically comes under the 80QQB. And next one, that is 80RRB, RRB, that is basically R royalty on patents, clear. That is deduction in respect of royalty on the patents, clear. Deduction in respect of royalty on the patents. You will see your income tax return, you will see that 80TTA are also there, clear. It is basically that what is that deduction in respect of interest on the deposits in the saving account, clear. In the saving account also you are continuously earning the interest. So in that basically if you getting the deduction, that is basically deduction under section 80TTA, clear. 80TTA. Next one, that is TTB, that is TTA basically for the general citizens and for the senior citizens, clear. So reduction in respect of interest on deposits in the case of senior citizens, clear. TTA less than 60 years, you can say that. TTB more than 60 years. Last one, 80U. It is basically reduction in case of a person with a disability, clear. It is basically deduction in case of a person with a disability. So like one more question from my side, like NPS. It is also a deduction, clear. It is also a deduction and maximum that is 50,000. So kindly tell fast in the comment section under which head or under which section basically this deduction it is to be included, clear. Under which section this is to be included. Like many of you are under the NPS, clear. Many of you basically are under the NPS or basically your NPS is to be deducted. So please tell fast in the income tax return under which section NPS is to be included, clear. NPS is to be included, clear. So in this session we have to discuss up to this much point. And I request to once again kindly join the live session so though you can ask your doubts or queries on the time. And that is also let's do more interactive one. Okay. So in this session, we have to discuss up to this much point. In the next session, we will complete this chapter along with the discussion of MCQs. So thanks to all of you for joining this session, and for all other updates, you can join our Telegram group and subscribe our YouTube channel. Sessions continuously going on for PPB accounts, retail, and Indian economy. Thanks to all of you for joining this session.